The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. I'll use my favorite term as I summarize Tuesday's trade: mixed bag, I would say. We got some support that held in the soy complex. Corn was flat to slightly lower. Wheat trade kind of the same. A good rebound in the cattle market. Crude oil up over 2%. Again, I would just classify it as a mixed bag, kind of that holiday type of trade. Seems like it's already settling in. Let's talk about Tuesday's action, what we're watching on the charts, and more as we work into the final month of 2024. Joining us for a conversation, he's with agmarket.net. Brian Splitt is with us here today on the show. Brian, it's good to catch up with you again. Hope you and your family had an awesome Thanksgiving, bud.
Yeah, we did. And likewise, hopefully you guys, with your new addition to the family, had a good Thanksgiving. But yeah, mixed bag. Your mixed bag is my position squaring, right?
Couple different terms to throw at it. Yeah, position squaring, mixed bag, malaise in the markets, that kind of thing. It just feels like we were chatting about this off air, and I know we'll dive into the things a little bit deeper here in a second, but it just feels like these markets are already in the holiday mode, Brian.
Yeah, I mean, I'm in holiday mode already. I feel like Thanksgiving ruined me for the next month. And maybe that's how other people feel, but the market's just been quiet. We're dealing with getting rid of this December corn contract. So there's being some rolling still being done, and it's in delivery, but now front month is now the March contract. And I think it's interesting if you were to look at your cash market locally right now, and it's not going to be like this for everybody, but several people I talked to, the cash price right now for December delivery is as good or better as what you're going to see cash values through the remainder of the year. And so it's just one of those things where, does it make sense to continue to pay the cost to carry it? Are there other ways to have ownership if you feel like the value of it's going to go higher? But we are dealing with two things that have happened in corn. We've seen the basis improve substantially. And futures, even though we're not at the high, maybe we're a dime off of the recent highs here, we've seen the board go up. So board has improved, basis has improved. That's what your bins are for. Just because it's in the bin doesn't mean it needs to stay in there forever, right? It's done its job to an extent here on two of the things that you want to see when the grain goes in the bin. You've gotten them both. So I do think there's going to be some general support going into the end of the year. The fund manager is long corn right now, and I don't know how long they're going to get. There really doesn't seem to be a case for them to be aggressively long where, hey, we're going to go, lop into 300,000 or 400,000 contracts a length. So I think right now maybe this is an exercise in they're long corn, they're short beans, they're short wheat. So we talked about some position squaring and some mixed bag type of a trade. And I think that you're going to see a lot of that day to day where one market might be down and the other might be up, or two are down and one's up, or vice versa. So that's probably going to be a lot of the choppy nature of this market over the next several weeks.
And to that point, I think it comes down to, okay, how long do I want to have that risk out there? How long do I want to manage my risk? Do I just want to get some money flow before the end of the year? Do I wait, or do I need to wait for tax reasoning till January 1 to move some of this, et cetera, et cetera? I mean, there's a few of those questions at play, but you get into this time frame, and I think some folks just say, enough's enough in some cases here, specifically thinking about the corn market right now, Brian.
Yeah, I mean, the market's trending higher since August and hasn't changed that. And as long as March corn holds the 420 area, it's about where the uptrend comes in. It's still intact. And maybe the good news is the upper end of the channel, if we were to venture our way back up there, it comes in right around the 200-day and right where we made highs in October, and that was around that 450 area. I think it was 452 and a quarter. So I think if a guy was trying to be patient and see if things maybe did grind higher as we approach the end of the year, that's the area that I'm shooting for, is around 450. I think it's possible. There could be some conversations as we get closer to January and start talking about that final production number a little bit more. does the yield come down a little bit more because it came down in November, right? So does that make the production number a little smaller? We look at exports. The export pace would suggest that we could see the USDA increase the corn for export. We do have a report in December. They could do this on that report as far as yield and demand, but usually they don't. Usually December is just a vanilla report and they kick the can to January. But let's kind of figure out, well, what is this January report, right? So we had a quarterly stock report back in September, and that was basically the amount of product that we had at the end of the marketing year coming into the new harvest. And then we get a final production number in the January report. So that's the acres times the yield. That's the total bushels for production this year. And then you have the old crop carry-in, that September stocks report added to that number, and that's your total pile. Well, January also has a quarterly stock report, which that total pile minus the January number is your first quarter implied demand. So now that's going to have the USDA then change some of the demand numbers on the balance sheet. And again, we already referenced the exports being very good. So there should be an adjustment higher in corn for export in that January report. So I wonder if it's maybe not setting up for a little buy the rumor, sell the fact, where we kind of grind up into that report. And maybe the more we rally into the end of the year, into that early January period, the more likely we are set up for that type of a move. But I just think, the 200-day moving average on March corn stopped us in 2023. It stopped us in 2024 for our May highs. And that would be right where that lines up at 450 if we were to get there. So I'm slightly optimistic we might be able to grind 20 cents higher. But it's going to take the export market continuing to stay firm and some lack of other bad news out there to come to fruition in the meantime.
Brian, how about in the soybean trade? I want to talk a little bit here. We found some decent strength Tuesday, but a Reuters report out on Tuesday morning saying the Biden administration's not going to finalize the 45Z tax credits from the Inflation Reduction Act. This is something that the industry has been waiting on and waiting on and waiting on. Biofuel producers hoping to get the guidelines before the change in administrations, and now it just feels like all of this is in limbo. There's been all this investment in infrastructure, and we keep talking about how this could be such a huge new demand opportunity, yet here we are with no certainty on these tax credits. I mean, throw that in with all the other bearish factors, I guess I would say, that are out there for soy. Your thoughts on that news and just looking at the soy complex in general, Brian?
Yeah, to this point, 45Z has been pardoned, right? So
yeah,
we don't know what the outcome is going to be. And so what that means is that we have a new administration that's coming in. And because this is all part of that, as you had mentioned, the Inflation Reduction Act, and we know the administration that's coming on board is going to be looking at the Inflation Reduction Act and trying to disassemble that. So we just don't know how they're going to handle this particular issue. But as of right now, it doesn't look like it's a good development. But here's the thing. I mean, so beans, we had, like you said, a bounce this morning, and it feels like, the bean market, you've got January is the front month, and it has just yet to take out its August lows. March has, May has, July has, August has, September out to new crop of next year has already taken out the August lows. But this January contract just hasn't been able to do it yet. And it seems like every time we get, 980, 975, it's just like the selling dries up and they're not ready to push it into new lows, and you get a little relief rally. We've been doing that for the last week and a half, 2 weeks. Maybe we just need to get comfortable enough with the South American forecast as it gets into January, as we really get into the time frame where it's crucial to the development of their crop, that the weather still looks good. I think we put in added some rain in the forecast for like southern Brazil and Argentina that was a little bit on the drier side. Temperatures have been okay, so it really hasn't been an issue. But if we start to progress later in the month and the forecast for January looks beneficial, it feels like it's probably inevitable that we're going to push through there. But again, weather's weather. And as long as we're not taking out the lows, if something were to pop up on the weather front, then I think you're going to very quickly see short covering, just because we are at the low end of a recent range. So, again, it seems like at some point we will likely break down through this area. It's going to require the South American weather staying beneficial to do that. But as of right now, there's really not a concern on the weather front at this point. So we look at meal, and that's the one thing that has me like, all right, so meal's super cheap. We're like $5 away from the lows we had during COVID, right? $5, if you're a listener, like what does that mean on the board of trade? That's a $500 move on one contract, $500 a ton, or $5 a ton.
Mm-hmm.
And so on beans, that's like 10 cents, right? Beans are here $1.80 off the COVID lows. Corn's, $1.25 off of COVID lows. So meal is extremely cheap. And I just wonder at some point if the funds decided, hey, we're getting out of the long bean oil because of this 45Z uncertainty. We're going to get out of our short, aggressively short, near record short bean meal. If that might not get this bean meal to recover, and maybe that helps support the soybean market itself off of this base of lows. But again, it seems to me inevitable at some point, if the South American crop is good, that we're going to break down through here.
I'll ask you this: the dynamic between the row crop markets right now, corn to beans, is there any indication to you that the market's maybe trying to buy more corn acres in 2025 already versus soybean acres in the U.S.? Anything there, Brian?
Yeah, I mean, that's the way it's set up right now. No one's really looking at $10 beans for next year and is excited to do that. And as my business partner Matt would say, D's corn at 430 isn't winning any beauty contests either, but it looks better than $10 beans. And so it seems like we're already at that point. And maybe this is something that is the long-term potential bear case for corn and the long-term potential bull case for beans at some point, because we've seen that trade from the funds for a while now, where corn has been going up and beans have been going down. And that has been on both the old crop and to a little bit lesser extent on the new crop. But at some point, if we lose out on some bean acres and we lose acres overall just because of the general dynamics of the economy that we're in right now, does that get to a point where the balance sheet might look a little bit better down the road if we start to say, well, what if this isn't a trend crop on beans? We lost some acres, and if the yield takes a little bit of a hit, now we're looking at maybe a little tighter scenario. But it also gives a sense where if we get some extra acres on corn, it'll help alleviate some of the concerns down the road about weather. So I think it's going to be a little tug of war, but eventually that's going to flip.
Brian, how about the wheat markets? Looking across all three complexes, any big notes for you there today?
Yeah, I mean, you got soft red, the Chicago wheat variety, got within about a penny of its August lows in the March contract. You have KC wheat's already taken out the August lows. And again, it just makes corn look a lot different than everything else we talk about, right? Corn is still off of its August lows by a pretty decent chunk. And you've got beans have been visiting August lows, and you've got wheat visiting August lows. So the wheat market is benefiting, or at least the crop is benefiting from a much improved conditions. But that has been at the cost of the value of wheat. We saw some very short-term strength on some quick little geopolitical tensions in the Black Sea region, but that was a rally that was sold into. It took us right back up to resistance. So if you think about Chicago wheat in March, we were holding 580 from early September until about mid-November. And then once we took out 580, we broke. That geopolitical tensions took us back up to revisit that resistance. We couldn't get through it, and here we are back down to the lows again. We're in a downward trending channel. I think we're likely to see new contract lows coming into the wheat market here as we approach the end of the year.
How about over in the protein sector? Let's talk cattle. We had what felt like profit-taking Monday in feeders, and that spilled into fats. And then here we are on Tuesday, pretty much get it all back. Your thoughts on this cattle market here, working through the final month of the year, Brian? What stands out to you right now?
Yeah, I mean, yesterday was one of those days where, you'd say, okay, we made a new high for the move in feeder cattle. We closed below the previous day's low. It was a pretty strong reversal. But the reason after the fact seemed to be maybe a little bit overdone because of that plant closure. It was more of a secondary plant. We probably shouldn't have sold off as much as we did just based on that news. But it did create a bar that sticks out on the chart. And regardless of what the reasons are, that was still a reversal. So I think that bar yesterday on feeders is going to be a very important bar. And not to say that we can't take out the highs or the lows, but I think the market's going to go with the direction of whatever way we violate yesterday's bar. And if we were to have that reversal lower yesterday and end up taking out that day's high, I think that just really confirms how strong this feeder market is. But if we take out yesterday's lows, especially after recovering as much as we have today, if we then push through yesterday's lows, because again, today was just an inside bar. So as strong as we were, it was just inside of yesterday's range. So if you ended up taking out yesterday's lows, then I think that then gives a little bit of a confirmation that yesterday's high was a bit of a key high in the market. And the funds are very long. And that doesn't mean that they can't buy more, but it's just makes the market look very vulnerable. And the same thing goes for hogs. You know, the funds extended their record length in hogs. And again, they could continue to buy more. Hogs can go higher, but we've seen how this story ends before. Whenever we're at record length or record shorts by the funds, they're probably pretty close to reversing.
Brian, always appreciate the insight. Anything final you would mention or reiterate to folks here on today's show?
Yeah, I want to do a little shameless plug here just because we've got our early bird special is expiring for our conference. We're having that in Nashville. It's February 2nd and 3rd. And the special runs through the end of the week on Friday. So if you have any desire to get out of town and head into Nashville in February, learn about the markets, have a nice meal, commiserate a little bit, then check that out. It's right at the top of our website, www.agmarket.net. Just click on the banner and you can read the itinerary and all the speakers and decide if you want to make it out or not.
Farming for Profit, Not Price, the name of the conference. And again, as Brian said, agmarket.net for more info. February 2nd and 3rd in Nashville. Great lineup of speakers. I'm going to be there. It's going to be a lot of fun. And we hope you can join us as well. Brian Splitt, agmarket.net. Always good to catch up with you, my friend. Thanks for joining us on Market Talk today.
Yeah, likewise, Jesse. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.